Welcome to the Aviation Insurance Podcast, the podcast that helps aircraft owners and aviation businesses learn and understand the complex world of aviation insurance and risk management. From the basic principles of aviation insurance to risk management techniques and updates on the aviation insurance market, the Aviation Insurance Podcast is your guide to traverse the world of aviation insurance. Now, here's your host, Tim Bonnell.
Hello, Aviation Insurance Podcast viewers. I'm just going to do a quick solo episode. As you've probably seen if you've been watching this podcast or listening to it for some time, I like to do an aviation insurance market update every so often just to kind of keep our listeners up to date with what we're seeing, hearing, and reading in the aviation insurance market. And obviously, even though aviation is a very small portion or niche of the insurance industry as a whole, it still is a pretty big industry with several sectors. So we'll just give a high-level overview in general of what we're seeing, hearing, and reading. And ultimately, we're recording this in July of 2023. So for the summer of 2023, we're still seeing the aviation insurance market continuing to trend up in terms of rate in most sectors, especially for customers with loss, records. A trend for having claims or some high dollar losses on their books. But ultimately, we've still got these root issues that we're dealing with in the market. Number one is we're still dealing with the fallout from years of artificially low rates from a soft market that lasted from about 2006 to 2018. Rates got so low that they were not sustainable to pay claims. And so we had a series of 5 or 6 years, year on year, where aviation insurers, definitely in general aviation and commercial aviation, were losing money. So that necessitated some carriers deciding to leave, necessitated the others to increase their rates and tighten their underwriting. So that's still going on. Then we have the fallout from COVID and some of the supply chain and inflation issues that caused. We're also dealing from the fallout from the 737 MAX losses to the actual airlines themselves, and the grounding liability costs that occurred to Boeing, which both combined, totaled in excess of $2 billion of a loss to the market, which is a significant amount of the global aviation insurance or aerospace insurance premium. Now we have the continued potential fallout coming from the Russian confiscation of foreign-owned aircraft that happened in the spring of 2022, I believe, where there are approximately 400 leased aircraft leased from companies not Russian-based to people in Russia, and those that were confiscated there, totaling about $10 billion in potential losses or more to the aviation insurance market. And now that's not been fully realized, but there have been several claims paid. So this has had, several impacts to the market over these 3 or 4 different things. Number one, we've got inflation, right? So the cost of doing business has increased for everybody, including insurance companies. We've got increased parts cost, labor costs. Basically, everything is more expensive to do. That leads to higher claims cost. It costs more money to settle claims, to pay for the parts, to pay for the damage, to pay for the repairs. Aircraft are on the ground longer in liability claims because it's harder to get parts, and some of them sit for a long time. So this increases the claims cost. And then, especially in the United States, juries are continuing to award higher liability awards to aviation losses. Some of them very significant in the hundreds of millions. And obviously this has a pretty significant impact on the aviation insurance markets, and aviation insurers then have to prepare to be able to handle those type of catastrophic losses. At the end of the day, then, all these things have impacted reinsurance costs. Most insurance companies reinsure a meaningful portion of all the business they write. They couldn't insure profitably and without having major hits, without spreading the risk to other insurance companies. So they have to pay reinsurance cost or a reinsurance premium for everything they insure. And those reinsurers are charging the insurance companies higher reinsurance costs. So their costs are going up. Those have to continue to be passed on to the users in order for the markets to remain profitable and the market stable. So, what does this mean? Well, it just depends on the market sector, and obviously, each individual risk is different. We have general market trends for renewal increases. For instance, airlines with the capacity and everything else on their primary policy for their airline whole and liability may be similar to last year's rates. However, the war risk coverage for the physical damage or whole uh, is probably going to be up 100%. Now, war risk coverage, there is in all policies a war risk exclusion saying we're not going to cover any losses due to war, riots, insurrections, acts of malicious acts, so on and so forth. And you can purchase that back, and that's purchased through the war market. So that is it's a much smaller portion of the premium, the overall premium to any operator, but that portion of the premium that was war risk whole is up about 100% right now, and obviously the liability war risk coverages are up quite a bit as well. Those aircraft lessors and banks, due to the Russian issues, they're definitely seeing some increases, potentially 10 to 15%. Certainly in their risk category. One thing is we've heard from some insurers, we have reinsurance renewals. Typically, many of them happen January 1, April 1, and July 1. And so we're just starting to hear from some insurers on their reinsurance renewals from the July 1 reinsurance renewal dates, and they're needing to get rates up in several areas, and certainly the product manufacturers and MRO service providers, they're getting more pressure to get rates up on those type of operations. Certainly, the larger operations and those with more critical risks. So loss-free, average increases could be 10 to 15% in that category. Airports and municipalities, they're currently seeing 7.5 to 15% on average. Again, I just want to reiterate, these are averages. There are all kinds of exceptions to rules. Some people had increased rates already. Some people had claims come off the records. There's just all kinds of other factors that could lead someone to have a less of an increase, no increase, or even a larger increase if there have been increased exposure, like increased values, increased sales, obviously increased claims cost as well. So plenty of exceptions to the rules. So these are just average, risk is the same, exposure is the same, no claims type of estimates. And again, there's still exceptions to that. For general aviation, on a few select, they may see a very little to no increase up to about 15%. So 5 to 10% probably being an average increase for general aviation for their primary whole and liability policies, with some risks maybe having little to no increase and others slightly higher, again depending on all those factors. Again, as with airlines, the whole war risk premium will still be up about 100%. That may not make a major impact to the overall premium, but it is a factor. At the end of the day, the good news is with all of these changes, both insurers and reinsurers have kind of they've not had any knee-jerk reactions to this Russia issue. They've kind of been taking a wait and see approach, trying to see how things will continue to play out. We're seeing some things happen, but not everything. And the other good news is that there's still plenty of capacity. We still have plenty of insurance carriers willing to write aviation business, and that's part of what keeps the rates stable. If there was some events that led aviation insurers to leave the market, reducing the number of aviation insurance companies in the aviation insurance market, reducing the capacity, that would definitely have a negative impact on the rates. So there's some good news there. There's some hope. There's some potential light at the end of the tunnel if rates continue to come up and be healthy and losses come under control. But at the end of the day, the current state of the market is that it's continuing to trend up in terms of premium and underwriting restrictions, and there's still some wait and see items that need to be evaluated. And but otherwise, that's kind of in general where we're at. Hopefully, the market will continue to recover, and everyone will see the benefit of that. Well, that's all for this aviation market update for the summer of 2023. Join us again next time as we continue navigating the tailwinds and headwinds in aviation insurance. Until then, enjoy clear skies and unlimited visibility.
Thanks for listening to the Aviation Insurance Podcast. If you found this episode of value, please share it with someone who would benefit from this information. Don't forget to subscribe in your podcast player so you don't miss any new episodes, and to help our show have more impact. This episode is brought to you by Aeris Insurance Solutions, your flight plan for navigating the turbulence of aviation insurance. For more information, visit aerisinsurance.com. That is www.aerisinsurance.com. Disclaimer: these episodes are for educational purposes only, and due to the changing regulatory and legal nature of the business, some information may change over time. Having a well-educated and experienced aviation insurance broker on your team is an absolute requirement to success in business and for managing your aircraft and aviation business risks.